CNBC TV18, celebrating 15 years of leadership.
Oil marketing companies refuse to supply fuel to SpiceJet on a credit basis, say no communication has been received from the government. A handful of flights take off from Delhi as the airline pays about 3 crore rupees to OMCs. But sources tell CNBC TV18 former promoter Ajay Singh could emerge as the white knight for the airline.
The centre gearing up to table the constitutional amendment bill for GST in this session of Parliament. A crucial cabinet meet to approve the bill has just concluded a few minutes back. That's an exclusive.
The Lok Sabha passes the Companies Act Amendment Bill of 2014. The approved amendments simplify related party transactions and allow winding up cases to be heard by a 2-member bench, among others.
Volatility rules the roost on Dalal Street as the markets close another day in the red. Nifty loses 0.5% but manages to close about 8,000. Sensex sees a 70-point drop. Rupee also ends the day marginally in the red.
All eyes now on the U.S. Federal Reserve as the 2-day policy meet ends today. Despite lower inflation and plunging crude prices, a CNBC survey sees the Fed on track to raise interest rates for the first time in 8 years this summer.
The Russian ruble recovers after hitting a low of 80 as Russia's finance ministry starts selling foreign currency. No respite for crude. OPEC and Russia keep output steady. Crude falls weighs in on European markets.
Bharti Infratel has its sights set on telecom infra company Viome as some shareholders seek an exit. Valuations, though, could be a hurdle as Viome investors seek $1 billion. That's a CNBC TV18 exclusive.
That SpiceJet, there's some update coming in there. The operations have been grounded as oil companies have stopped fuel supply.
Passengers have to run from one counter to the other, from one place to the other to find out because nobody is answering the telephone.
Unfortunately, we've had a situation which has been forced on our hands as a result of lack of fuel supply.
The flights that had been scheduled to take off after 4 p.m. have also been delayed, or there is no clear status on some of these flights.
Well, there is some light emerging at the end of the tunnel for SpiceJet, but just how bright that light is or how quickly the airline will walk into that light is $1 million question. A handful, and I do mean a handful of flights, did manage to take off today from New Delhi. This was after the airline paid oil companies 3 crore rupees for fuel on a cash and carry basis, net Dara.
And Shireen, the latest twist of a former promoter of the airline, Ajay Singh, spotted in the corridors of power. Is he going to be a white knight? Is the airline going to get another one? We did see Wilbur Ross rescuing them last time.
Well, that's right. Could Ajay Singh be the white knight this time around? Will SpiceJet manage to stay afloat? We will keep you updated on the latest right here on CNBC TV18. But for now, let's start with the day's trading action. It was a volatile session on Dalal Street, which ended on a weak note. After opening deep in the red, equity saw some consolidation midway. However, those gains evaporated by the end of the day. So the Nifty closing with a loss of about 0.5%, just above the 8,000 mark, and the Sensex was down over 70 points, ending the session over 26,700. So the volatility continues. In the currency market, the rupee extended its loss for the third session in a row, hitting a fresh 13-month low in an intraday basis, weakening by 34 paise to 63.87 to the dollar. Traders ascribe this rupee weakness to the dollar's rally against its global rivals and the fact that the Indian stock markets are seeing increased FII outflows, concerns over a weak global economy following the turmoil in Russia, and China's factory indicator hitting a 7-month low, also working against the domestic currency. So that was the status on the rupee. Going back to the top story, SpiceJet is under serious threat of downing shutters, with oil marketing companies and lenders yet to pitch in with any relief. The airline now insists it's working on a solution and even goes so far as to say that operations which have been grounded for over 24 hours should resume soon. But CNBC TV18 Sajid Mangat and Farah Bukwala report that even this reassurance has a hollow ring to it.
We don't want to shut down. In fact, the government doesn't want us to shut down. But then it takes two to tango end of the day. We just need a little bit of assistance. And if we get the right kind of support, I'm sure we will fly through out of this turbulence. Just 600 crores would get us going, and I'm very confident that we will turn around and make a decent profit with the current situation in the fuel market.
Despite the plea and the Civil Aviation Ministry's intervention, SpiceJet is being given the cold shoulder by oil marketing companies. OMCs say they have received no information from the government on extending a credit line to the beleaguered airline. With no access to fuel, SpiceJet was forced to ground almost all flights across India today, and a handful that flew were on a cash-and-carry basis. The government has asked banks to extend support to the company if the promoter, the Murrans, give a bank guarantee. But so far, capital infusion looks tough.
It's not like, Mr. Maran is not funded. To the best of our ability, we've done it. The family office does not have the liquidity to pump in 600 crores at this time now, and which is why we needed help to get this money sourced from the banking system. And he's willing to give a personal guarantee, but nobody wants to accept it.
The Sun Group is not going to make the same mistake as the United Breweries Group. It has decided not to expose its group companies to SpiceJet or allow its assets to be leveraged by the ailing airline.
Unfortunately, we cannot leverage any of the media assets. It's not only unethical, it will be very, very lousy corporate governance. We will not go down that path. So the way we've organized our businesses is each strategic business unit is firewalled against each other, and each unit fends for itself.
With no real help at hand and creditors tightening the noose, the management is finally acknowledging that the end could be near.
But the real issue is when all creditors land up at the doorstep and everybody wants to get paid at the same time, a stressed company simply cannot survive.
And so it seems that the Indian skies may be preparing to bid adieu to one more airline after Kingfisher. In Mumbai with Sajit Mangat, Farah Bukwala Vora.
But there is some ray of hope emerging for SpiceJet. CNBC TV 18 Labs former SpiceJet promoter Ajay Singh may reinvest in the airline in an attempt to prop it up. Singh was spotted meeting the Civil Aviation Secretary earlier today and is likely to be an important part of SpiceJet's revival plans.
In fact, SpiceJet's troubles haven't gone unnoticed by global investor Wilbur Ross. The chairman and CEO of WL Ross & Company says price competition and high fuel costs will continue to be a burden for low-cost carriers. Remember, Wilbur Ross played white knight for SpiceJet earlier, and this time around it could be former promoter Ajay Singh.
There are too many low-cost carriers in India. That means duplication of expenses on routes. It means inordinate degree of price competition. And I had tried very hard to see if we could consolidate the industry, but we were not able to accomplish it. And other than through bankruptcies, I'm not sure that anybody will be able to consolidate the industry. I don't think there's room for more than maybe two true low-cost carriers, but if we can get down to where there are just a couple, then it could be a profitable business, particularly nowadays with oil down. Oil is by far the largest single expense of a low-cost carrier.
There are too many low-cost carriers in India, says Wilbur Ross. Well, maybe we won't be left with too many carriers. At least SpiceJet's future continues to look bleak and uncertain unless they see some capital infusion. Now, the Lok Sabha has passed the Companies Act Amendment Bill of 2014. 14 crucial amendments pertaining to related party transactions, auditors' responsibility, the public inspection of board resolution have been approved. The Corporate Affairs Minister Arun Jaitley told the House that without these changes, nobody would set up their business in India. Malvika Jain says the opposition made a half-hearted attempt to send the bill to the standing committee, but failed.
Amendments to the new Companies Act, which came into effect barely 9 months ago, have been approved by the Lok Sabha. The government defended the changes, saying they will improve the ease of doing business and attract investments. The Companies Act Amendment Bill 2014 was passed by a voice vote in the midst of demands from opposition parties to refer the bill to a standing committee.
The object of these amendments, none of them has any ulterior motive of anybody. And therefore, nobody needs to claim that there is a high moral ground in opposing such a objection. With some of these provisions, doing business in India would become extremely difficult. There are some provisions which we are easing. There are some which was oversight. There were some which were left out. And there are some which came in, but came in as a part of this thinking that we must make doing business extremely difficult. So if somebody is arrested and he belongs to a company, a terrorist can get bail, but he should never get bail.
The Congress made a weak attempt to send the bill to the Standing Committee but gave up fairly quickly.
In a hurry you want to bury this act. So therefore, why I'm requesting, instead of already the 176A, it is a new and we all welcome. But there are other amendments, certain reservations are there. Why should not we refer to the Standing Committee or Select Committee?
While the industry has welcomed the changes, it does believe that the government could have gone further. Experts say that the changes are a step in the right direction. The amendments are related to 7 key issues involving related party transactions, reporting of fraud by auditors, public inspection of board resolutions filed by companies, requirement of special benches of National Company Law Tribunal or NCLT for hearing winding up cases, trial of all offences by special courts, punishment for offences related to deposits, removing restrictions on bail and doing away with statutory minimum share capital requirement. The bill will now be sent to the Rajya Sabha, where the government is in a minority. In New Delhi, Malvika Jain.
And this is the big breaking story. This is the headline we were waiting for. CNBC TV 18 has information that the GST bill has indeed been cleared by Cabinet. Remember, the Cabinet deliberated on this matter starting 6:30 this evening, and the Constitutional Amendment Bill, the GST Constitutional Amendment Bill, has been cleared by Cabinet. It is likely to be tabled in this session of Parliament itself. That is what the government was hoping for, and now we do understand that the bill has been cleared by Cabinet. Sapna Das, who broke that story, joins us now with the details. Sapna, it's a done deal. The Cabinet has given the go-ahead for the GST Constitutional Amendment Bill?
Absolutely. This is what the status is now, and as we have been indicating earlier also, that this bill has been cleared with some degree of consensus from the state governments. So this is a cabinet nod, and it's now all ready to be tabled in the current ongoing winter session of the Parliament. The centre has been keen to push this agenda. So probably in the next 2 or 3 working days that remain for the Parliament session, we will see progress on that front. But however, it could be a long road forward in the sense that this will just be a tabling of the bill. It's in the budget session that probably the debate and discussion will begin on the bill, and then of course the enormous task of both houses having to vet it.
Because I'm going to ask you to hold on. I'm going to ask you to hold on and go through the details that you have been gathering over the past several days in terms of the contents of that bill. But let's get in voices now. Sachin Menon joins us. Sachin, appreciate you joining us here on CNBC TV 18. This is the big story at this point in time. The GST Constitutional Amendment Bill has been cleared by Cabinet, paving the way for the bill to make its way to the winter session of Parliament. Your first reactions?
Well, I think I am very happy to hear this news. This is a moment in history for the Indian government. I am sure that this is going to help India to be elevated to the economic powerhouse that it is predicted to be. And it also would open up a common market for India, and it would also ease doing business in India. And I'm really excited to hear this.
Well, you are excited to hear it, and as you pointed out, this is historic because we've been going back and forth from the time of the UPA, from the time of the then Finance Minister, President, and now President Pranab Mukherjee, and finally this bill is going to be presented in Parliament in this session. But let's talk about the points where the government has actually had to climb down in order to get the states on board. The controversy as far as petroleum is concerned, petroleum products are concerned, nil duty rate being subsumed eventually into the GST. Do you believe that this is a half-baked bill, this is an ideal bill that is being taken to Parliament?
Well, given the demographies and the questions within India as a federation, I don't think that we are going to have a perfect GST bill ever. So, especially this dual GST is a regime which was first time experimenting in the world, in any of the countries for that matter. So for that matter, there has to be some kind of compromises in some of the issues without which I don't think that you'll ever have a GST. So if you are waiting for a perfect house, it may not be practical. So given circumstances, I think there is a fair understanding about keeping the entry tax within the GST and the petroleum products for that matter. I would imagine that perhaps this is the best possible way which we can address this conflict between the state and centre.
All right, so you're saying that you need to broker some sort of a compromise in order to get moving as far as the GST is concerned. But let me go back across to our colleague Sapna Das, because she's been bringing us information on this, and then I'll come back again to you, Sachin. Sapna, for the benefit of our viewers who are just joining in, take us through the contours. What is the information that you've gathered from sources in terms of what the contents of the bill are?
Well, the broad contours basically indicate towards the setting up of the GST Council. This is very well known. This will, of course, the Union Finance Minister will chair the GST Council. The GST Council will be fulcrum in the sense of the tax rates, the GST rates, and all other various negotiations between the state governments and the centre will be decided by the GST Council. That's one. So the passage, or rather, whenever the bill is passed in the Union Parliament and by the state legislatures later, it will give basically a constitutional teeth to the GST Council. That's one. In terms of the membership of the council and how the decisions are going to be taken, the type of number that the government is actually looking at is 3/4 members present in voting for decisions to be taken, and in the voting a share of the central government will be 1/3 in terms of the voting rights. So this practically gives a kind of a veto to the central government in the sense there are so many state governments and centres alone. So it should not appear as if the state governments are just able to muzzle through whatever they want. So this is more of a balancing act in the GST Council. The centre has been quite generous in terms of keeping only 1/3 of the share of the votes. And most critical, in fact, the items which are going to be in the Constitution, out of the Constitution, petroleum products are going to be in the Constitution. Entry tax is going to be subsumed into the Constitution. However, on petrol products, most probably it will be at nil rate.
Yeah, I'll come back to you, Sapna, in just a bit, but our colleague Rituparna Bhuyan, who's been tracking the cabinet meeting, also joins us now from Parliament. Ritu, marathon cabinet meeting finally over, GST being cleared. Any other information on, for instance, amendments to the real estate regulators bill, or any more information on the GST bill that's been cleared?
Well, we expect a press release to be put out by the Press Information Bureau on the contours of the constitutional amendment bill. Because the parliament session is on, there would be no formal briefing on this. As far as the real estate related bill is concerned, our sources in the cabinet, they are not ready to confirm us on the status of that bill, but from what we understand, there should not be any problem in clearance of that bill because it was already sent to the standing committee, and most probably, in all likelihood, it should be cleared.
I'll let you get back to work, Ritu, and get us more information. Let's go across to Amit from Grant Thornton. He joins us as always. Amit, thanks very much. So the Cabinet giving its approval to the GST Constitutional Amendment Bill, which means that in this session of Parliament, which ends on the 24th of December, we could perhaps see the government tabling this. What do you make of it? The broad contours, as we've been reporting, petrol products, entry tax to be subsumed into the GST, alcohol and tobacco will be out of the GST, and of course the compensation mechanism will still be worked out.
Well, if you look at the way in which the conversations around the GST amendment discussions have happened, one thing for sure is that this is obviously going to be a very significant fiscal reform from the current government, and that's the most important takeaway for all of us sitting over here observing the developments. The second is each of the points that you right now mentioned, Shireen. The biggest point over here is the fact that entry tax is going to be subsumed. I think that's a big decision that has happened. The state governments have shown that they are also actively supporting the entire introduction of the bill, which I personally believe is a very, very interesting development. Of course, once we see the text of the bill and we see how it actually gets passed in the parliament, a lot of other finer details may come through. But just this one point shows that the intent is good and the consensus is driven.
Oh, absolutely. The intent is clear. The question now is debate and passage. It's unlikely that we are going to see this go through Parliament in this session. Sachin, let me ask you that question. Even if this government were to just table this bill in this session of Parliament and take up the debate and passage in the budget session, it will be a significant sentiment booster, you think?
Absolutely, because entire world is looking towards what happens to the Indian GST bill. I'm getting enough queries from the foreign MNC companies, how is it progressing for that matter. And that now the state's concerns are taken care, and I would imagine that, the states were also asking for making provision for the compensation within the Constitutional Amendment bill. And I suspect that the states are agreed to table this bill would also point towards the possibility of government agreeing to that too. So,
Sachin and Amit, to both of you. To both of you a quick question, and I know that the rates are not going to be part of the amendment bill which has been cleared by Cabinet, but as our colleague Nantara has been reporting, the estimation is that the rate could initially be very high, the 20 plus kind of region, perhaps even between 25 and perhaps even higher. A quick take as far as the GST rate itself is concerned, even though, as I'm pointing out, it's not part of the bill.
Well, if you look at the rate discussion that's happening, and again, the devil is in the detail, obviously, but any rate of GST which is going to be above 20 or 22% will obviously be something that the broader industry would be frowning upon, because it comes very close to the simple arithmetic of just adding the excise rate and the VAT rate that is applicable in India today. The expectation was that one of the benefits of GST would be to remove the tax-on-tax cascading effect, which means a 22% rate should have been sufficient. But if it goes beyond 22%, then I'm sure a lot of people will start wondering what could be the exact reason why the rate has gone up.
Right. Sachin, what we are given to understand, and again, it's premature at this point in time, but our sources and highly placed sources in the Finance Ministry seem to suggest that the rate could be higher than 22%, which is what Amit was just alluding to. If that is indeed the case, do you believe that that is going to be a big setback?
Well, I don't believe that this 27% recommendation is going to go through for two reasons. Number one is some of the assumptions which is being considered by NIPFP. While arriving at the 27%, number one is that they taken the central sales tax rate as 4%. And that's one assumption. The second assumption they have taken is that there are two rates which will be there under GST, which is a concessional rate of 4% and then a 27%. And I don't think that government would go for a 4% lower rate. And NIPFP argues that if the rate is more than 4%, every 2% there is to be a reduction of the general rate by 3%. So which means that if the concession rate is 6%, then the 27 will become 24. So and so many assumptions which are on basis of which this 27% arrived at is not making sense. And I don't think the economists are also buying this theory. So I don't think that this will be such a high rate.
Let me bring Nitin Chapra into this conversation as well. Nitin, we're still awaiting official details, but this is confirmed that the GST Constitutional Amendment Bill has been cleared by the Cabinet, perhaps paving the way for it to make its entry in Parliament. Your first reactions? Bipin, can you hear me?
Yeah, I can hear you.
Yeah, your first reactions on the fact that the Cabinet has cleared the Constitutional Amendment Bill for the GST, paving the way to make it to Parliament this session.
I think it was long overdue. Really happy that this has gone through, and I think it will be really great for the entire industry and the country that this bill has finally seen the light of the day. Once it is passed, I think it will be the right step in the right direction.
Okay, what we are also given to understand now is that the compensation mechanism is part of the Constitutional Amendment Bill that has been cleared by the Cabinet. But Bipin, the fact that now it is going to perhaps make its way to Parliament in this session itself, do you believe that that April 2016 timeline can be met?
I would assume so, because this is, once this bill has been introduced in the parliament now, we should be able to clear it at least in the parliament in the budget session, and then this goes to the states for clearance. But in the interim, the work on the law can go on in full earnest. So my view would be 1st April 2016 is definitely on.
Okay. Sachin, let me just come back to you, because this is information that we're getting in from highly placed government sources at this point in time. I'm going to ask my colleagues to put it out as a news flash. The compensation mechanism is part of the bill that has been cleared by Cabinet. Your reaction to that?
Well, I imagine so, because one of the long-standing demand of the state was that to guarantee their compensation in the Constitution itself, so that center cannot postpone the disbursement without any limit. So if that is done, then very significant concern of the state is addressed. So that definitely would make the government to oblige and make provisions in every budget for this compensation, which is due to the state. So which would be rather soothing news for the states. So that I hope that the objection which they have the resistance which they have will significantly come down.
All right, gentlemen, let me get wrap-up comments from all of you. This is the information that we have as of now. This is, of course, source-based information. We are still waiting for the official confirmation to come in. But highly placed government sources tell us that the GST Constitutional Amendment Bill has been cleared by the Cabinet, that compensation to states is part of the Constitutional Amendment Bill that has been cleared by the Cabinet. Wrap-up comments. Amit, I'm going to start by asking you 10 seconds to end this conversation.
Well, now that it has gone through the cabinet, the most important thing to look forward to is how it gets passed in the parliament, and if there are any consequential changes that could happen. But looking forward very optimistically that there is a very significant landmark fiscal reform that's going to happen. So looking at it very eagerly and hoping that the government can meet its deadline of 1st April 2016, although I personally believe that's a very optimistic deadline to achieve.
All right, Bipin Sapra, more information and official, unofficial confirmation coming in. Government sources telling us petrol products will be part of the GST, will be kept at nil rates initially. What we were given to understand earlier was that perhaps for the first 3 years. Your quick comments on that before I let you go.
So I think that's a great move, first move in a long road ahead. That was very well desired, and I think once this gets integrated into the law and it really gets implemented, I think we'll have a good GST in place.
All right, Sachin, the last word to you. We started this conversation with you. Let me end by asking you, 2016, ambitious, likely to be a reality?
Well, this petroleum is now proposed to be nil. Nil rate is something which is a climb down by the central government. Actually, originally proposed was that it should be zero rated. There's a difference between nil rate and zero rated. When you say nil rate, which means that whatever GST input tax which they will incur will be a cost to the petroleum company as it is today. Whereas if you are zero rating it, the government is supposed to refund that input taxes, GST input taxes.
Yeah, so what I can confirm is that it will be kept at nil rate initially. They haven't specified the time period, but they have said that petrol products will be part of the GST and will be kept at the nil rate initially. I can confirm that.
So that is a significant change in the stand of the central government, and that would definitely bring the status quo of the petroleum products post GST, which means that it would only reporting purpose, it would be under GST, but otherwise all other taxes which is levied today would continue in some other form.
Okay. So that's a big climb down there as far as
this is the case. I don't think there's anything left out for the state to any objection left out for the state to address. Yeah, and if that's the case, I think there will be a smooth passage of GST bill.
Okay, so the government has gone in for the big compromise there as far as petro products are concerned. Nil rate initially, and perhaps this is to get the states on board for a safe passage to be provided to this bill. Bipin Sapra, Amit and Sachin Menon, appreciate you joining us here on what has been a big day as far as the GST bill and its step towards reality is concerned. Of course, hopefully we will see it being tabled in this session of Parliament. We are going to have to take a break here, but when we return, there's a lot more.
CNBC TV 18, celebrating 15 years of leadership.